So now let's just dive into their IR deck from their latest earnings release, which is March 4th, to go under the hood and get a look at their financial situation here. So Zoom, 88% growth in the year, 14% margin, 114 million in cash flow. So they are profitable and making money and producing cash flow. 86% growth in customers with $100,000 in total trailing 12 months revenue. I guess this is a key metric for them. These big enterprise customers that are really what drives huge growth in their business. Zoom Phone anniversary. This is a new product they've launched. 2.9 thousand customers with 10 employees. Scrolling down here, they have this chart about the most popular video conferencing apps showing Zoom's growth of 876%. On number of customers. I think this leaves out Google Hangouts, which I think is really interesting because I would actually, and Skype, to be honest, but I think those, I don't know, I think those are two more like platforms that are the biggest competitors, but this is Okta's Business at Work 2020 report, and it shows Zoom, this is sort of what I was telling you about, better product, gaining share in what you would have thought was an otherwise commoditized industry. This, to just give you a quick look at their financials, I mean, the growth speaking, backing up the whole story. This is what I love when I analyze companies. It's like, we're super disruptive. We're changing the world. We have a game-changing product. Our customers love us. We're getting more and more customers by the day. And now it's like, okay, well, let's see the financials. Is that true? You should be growing every quarter with crazy growth rates, constantly expanding, constantly hitting records if that's the case. And it is the case. Zoom consistently hitting new record revenue growth, 188 million in Q4, 78% year-over-year growth. This is a huge reason why it's justifying such a premium from a price to sales basis. Rapidly growing customer base and gaining enterprise traction. 81.9 thousand customers with more than 10 employees. Just to quickly go through, they show the international breakdown of their business. Here we're seeing Americas at about 70% of their business, still growing, basically where they're expanding, but more than doubling in rest of world, almost doubling in Asia and Pacific. So strong growth, not really an international company yet, but getting there and planting those seeds. Here they have total contract under revenue. As you can see, huge backlog growing, $604 million, growing up 94% year over year. So huge backlog, subscription business, predictable recurring revenue for Zoom. And I think that's another reason why the market loves this business so much. Cash flow growing as well, up 130% year over year, 37 million, maybe 150 million run rate of annualized cash flow, 160 million. Not huge, but the point is they are, despite this crazy level of growth, Zoom is already at that inflection point where they're starting to pump out a lot of cash flow and be super profitable. Another great sign of the business, free cash flow up huge as well. Then the last slide of this here, guidance, revenue for Q1, 199 to 201 million. Just want to put out, this is the important number we're going to be analyzing in a second, 905 million to 915 million. They have 301 million weighted shares outstanding. Love how they give the share count. Almost no companies do that. That's super awesome. Thank you, Zoom. Positive non-GAAP operating income of 110 to 120 million. So let's go to HyperCharts and crunch these numbers and see what that actually means. So Zoom did 623 million, 622.66 million in revenue in fiscal 19 or fiscal 20. So now let's see what they're going to do in fiscal 2021. 915. Let's just use the max of guidance. 47% growth. So this is one thing about Zoom's business that I think is sort of the, I don't know. It seems like they're growing, they're crushing it, they're killing it, but their growth is growing from like 100% to just 47%. So if we go here back to HyperCharts on a quarterly basis, scroll down to that revenue growth chart, you can see their quarterly revenue growth going down. When they IPO'd, it was over 100%, 120%, 107%. And the last quarter, 78%, much slower. And they're saying for the full year, they're going to average about 46% growth. So I think that's kind of slowing growth. And then now let's talk about the valuation of this, just from a price sales basis. Although, yes, from a operating income basis, the company is going profitable as well, but we're going to ignore the profitability for now and just assume that Zoom is all about growth, growing their top line. We're going to value them on price to sales for now. So Zoom, looking at a market capitalization of 36.4 billion, but remember, that's not really counting into this new stock comp dilution. So they actually gave us that number, 301 million, if you remember, right here, 301 million. So we can go 301 million times 131.84. So we're looking at about $40 billion market cap at these current prices for Zoom. So this is a company that's, remember, doing 915 million in revenue this year at the high end of their guidance. 40 divided by 0.915, 43.7 times sales. So this to me is the entire question of Zoom. Zoom is projected to do 950 million in sales. You're paying 43.7 for 46% growth rate. That to me is absolutely absurd because I think you need to have you need to either be keeping a 46% growth rate for 5 years and grow revenue to, 3, 4, 5 billion pretty quickly, or this is just way overpaying for the business. But then the flip side is that 915 million number that I'm quoting was issued as guidance on March 4th. 2 weeks ago at this point, the entire world has changed. It's looking like people are going to work from home for months and months. Zoom is basically going viral in popularity. So we could actually see Zoom, what if they up their revenue guidance to 1.2 billion? They say, no, we're going to grow like 70% this year, 80%. So I think that is sort of this change in future cash flow and trajectory of Zoom's business that the market is grappling with right now. And does that make sense? Is it worth it?